In this video, you'll learn about the two components of FICA, how payroll accounts calculate Social Security and Medicare tax withholdings, the maximum wage amount for Social Security, and the additional high wage earner withholding for Medicare. The Social Security Act of 1935 mandated the withholding of Social Security tax and Medicare tax in addition to federal income tax. These taxes are collectively known as FICA, Federal Insurance Contribution Act taxes, and both the employer and the employee contribute in equal parts to this tax, with one exception. Social Security tax covers people for illness, retirement, disability, and old age. In general, an eligible individual must work for 10 years or have 40 credits to be able to draw on Social Security. For those individuals born 1960 or later, the full retirement age is 67. You can start Social Security at that age or earlier, but won't get the full amount, or later and receive additional amounts. The Social Security tax is paid by both employer and employee and is levied upon employees up to a maximum wage amount that increases each year. In 2024, the wage base was $168,600. This means only the first $168,600 of wages earned are subject to the Social Security tax. Every dollar earned above $168,600 will not be subject to Social Security tax. In 2025, the wage base is $176,100, and it is estimated to increase to $183,600 in 2026. When I started my first job in California in 1989, the wage base was $48,000. There are currently discussions about implementing a special high wage earner Social Security tax, but specifics have not been worked out yet. The Social Security tax rate is 6.2% on eligible wages. Remember that taxable wages can be different from gross pay because of pre-tax deductions and the wage base maximum. There's an exception though. When an employee has multiple jobs in the same year, like for instance, from January to June, you work for company A and earn $90,000 during that time, and then you work for company B from July to December and make $120,000. Both employers would withhold Social Security tax on total earnings. Employer B would not know that some of the earnings are not subject to Social Security. So each employer withholds Social Security taxes. However, the employee's excess contribution is counted as federal income taxes, which means that you get credit for it on your annual tax return as if you had paid federal income tax. The employer's contribution is not refunded, though. So let's look at how you would calculate the Social Security tax in the following example for 3 employees. Please remember that the maximum wage limit we're using for this class is the 2024 limit, $168,600. So employee number 1 has a period pay of $3,500 and 48 prior pay periods for a total of $168,000. The maximum wage base for Social Security is $168,600, and that means that the employee's prior period wages are near the maximum wage amount, and there's only a difference of $600 that are subject to Social Security tax this payroll period. Let's look at employee number 2, who is paid $7,550 and has earned $166,100 year to date. We compare the year-to-date amount of $166,100 to the maximum amount of $168,600 and determine that for the current payroll period, period number 23, only $2,500 are subject to Social Security. What about the next employee? Employee number 3 is paid $8,800 semi-monthly wages and has earned $167,200 year to date. That means that of the current payroll period, period number 20, only $1,400 are subject to Social Security tax. The Social Security Act of 1935 mandated the withholding of Social Security tax and Medicare tax in addition to federal income tax. These taxes are collectively known as FICA, Federal Insurance Contribution Act taxes, and both the employer and the employee contribute in equal parts to this tax, with one exception. Social Security tax covers people for illness, retirement, disability, and old age. In general, an eligible individual must work for 10 years or have 40 credits to be able to draw on Social Security. For those individuals born 1960 or later, the full retirement age is 67. You can start Social Security at that age or earlier, but won't get the full amount, or later and receive additional amounts. The Social Security tax is paid by both employer and employee and is levied upon employees up to a maximum wage amount that increases each year. In 2024, the wage base was $168,600. This means only the first $168,600 of wages earned are subject to the Social Security tax. Every dollar earned above $168,600 will not be subject to Social Security tax. In 2025, the wage base is $176,100, and it is estimated to increase to $183,600 in 2026. When I started my first job in California in 1989, the wage base was $48,000. There are currently discussions about implementing a special high wage earner Social Security tax, but specifics have not been worked out yet. The Social Security tax rate is 6.2% on eligible wages. Remember that taxable wages can be different from gross pay because of pre-tax deductions and the wage base maximum. There's an exception though. When an employee has multiple jobs in the same year, like for instance, from January to June, you work for company A and earn $90,000 during that time, and then you work for company B from July to December and make $120,000. Both employers would withhold Social Security tax on total earnings. Employer B would not know that some of the earnings are not subject to Social Security. So each employer withholds Social Security taxes. However, the employee's excess contribution is counted as federal income taxes, which means that you get credit for it on your annual tax return as if you had paid federal income tax. The employer's contribution is not refunded, though. So let's look at how you would calculate the Social Security tax in the following example for 3 employees. Please remember that the maximum wage limit we're using for this class is the 2024 limit, $168,600. So employee number 1 has a period pay of $3,500 and 48 prior pay periods for a total of $168,000. The maximum wage base for Social Security is $168,600, and that means that the employee's prior period wages are near the maximum wage amount, and there's only a difference of $600 that are subject to Social Security tax this payroll period. Let's look at employee number 2, who is paid $7,550 and has earned $166,100 year to date. We compare the year-to-date amount of $166,100 to the maximum amount of $168,600 and determine that for the current payroll period, period number 23, only $2,500 are subject to Social Security. What about the next employee? Employee number 3 is paid $8,800 semi-monthly wages and has earned $167,200 year to date. That means that of the current payroll period, period number 20, only $1,400 are subject to Social Security tax. Here's a Social Security exercise to practice the calculation. Shoshana is a salaried exempt employee who earns an annual salary of $61,175, which is paid semi-monthly. She's married, filing separately, and claims 2 dependents under 17 per her 2024 Form W-4. What is her total Social Security tax liability per pay period? So let's first calculate Shoshana's gross pay for the payroll period, which is $61,175 divided by 24 semi-monthly payroll periods, which is $2,548.96. There are no pre-tax deductions. So our taxable wages subject to Social Security tax are $2,548.96. We double check that the employee is not near the annual maximum Social Security wage amount, which Shoshana isn't because her annual salary is $61,175. And the maximum Social Security wage amount for 2024 is $168,600. So we go ahead and multiply the taxable wage of $2,548.96 by 6.2% for a total of $158.04. Let's now look at the second part of FICA, which is Medicare tax. Medicare taxes provide basic health coverage for all individuals who generally have worked and paid Medicare taxes for 10 years or have a spouse who meets this requirement. Until 1994, the maximum wage amount for Social Security and Medicare was the same amount. However, the maximum wage amount was removed from Medicare tax in 1994, and now there is no maximum wage base for Medicare taxes, and the tax rate is 1.45%. This tax, just like Social Security, is paid by employee and employer. In addition, the Affordable Care Act of 2010 levied an additional Medicare tax of 0.9% on certain workers who earn more than $200,000 single, $250,000 married filing jointly, and $125,000 married and filing separately annually. This additional tax went into effect in 2013 and is paid by only the employees. Employers do not pay this additional percentage. Our textbook is only using a threshold of $200,000 for simplicity. Please keep in mind that this is an additional tax on high wage earners, but there are no additional services that these individuals receive when they enroll in Medicare for the additional tax paid. That is different than Social Security because those individuals who pay in more get a higher Social Security benefit. Eligible Medicare wages are gross pay less pre-tax deductions, such as the Section 125 deduction for health insurance. Just a reminder, the 401k deduction is not allowed as a deduction in calculating the eligible wages for FICA taxes. Here are some examples for the calculation of Medicare taxes. Sam is a security guard for a local facility. He earned $1,355.50 during the most recent biweekly pay period and has earned $21,688 year to date. He's married, filing jointly, and claims 2 dependents under the age of 17 on his 2024 Form W-4. He has no pre-tax deductions. What is Sam's Medicare tax liability for the payroll period? Well, first thing to remember is that the Form W-4 for federal tax withholdings and the dependents do not impact the Social Security and Medicare tax withholdings. So we can start with calculating the Medicare wages by first looking at the wages per pay period and whether there are any pre-tax deductions. In this case, there are no pre-tax deductions, so the calculation in this case is $1,355.50 times 1.45%, which equals $19.65. In the second example, Ina is a single full-time exempt employee who earns $232,500 annually, paid monthly. Her year-to-date pay as of November 30th is $213,125. How much will be withheld from Ina for Medicare taxes for the December 31st pay date? This is an example where an employee is subject to the additional 0.9% Medicare tax withholding. So the first step is to calculate the regular Medicare tax withholding by first dividing the annual salary by 12, because Ina is paid monthly, and then multiplying the result of $19,375 by 1.45%, which is $280.94. We then multiply the $19,375 by 0.9% for a total of $174.38, for a grand total of Medicare tax withholdings of $455.32. Here are two more examples. Renee is a salaried exempt employee who earns an annual salary of $50,160, which is paid semi-monthly. She's married, filing separately, and claims dependents per 2024 Form W-4. What is her total FICA tax liability per pay period? So it's important that you notice that in this case, you're asked to calculate the total of both the Social Security and Medicare taxes. We start by dividing the annual salary by 24 because Renee is paid semi-monthly, which results in $2,090. And then multiply the $2,090 by 7.65%, which combines the 6.2% for Social Security and the 1.45% for Medicare taxes to get the FICA tax of $159.89. Let's look at the next example. Paulo is a salaried exempt employee who earns an annual salary of $66,550, which is paid bi-weekly and has a Section 125 pre-tax deduction of $250. He's married and claims dependents per his 2024 Form W-4. What is his total FICA tax liability per pay period? We start by dividing the annual salary by 26 because Paulo is paid bi-weekly, which results in $2,675. We subtract the Section 125 pre-tax deduction of $250, which results in taxable wages of $2,425, and then multiply the $2,425 by 7.65% to get the FICA tax of $185.51. I hope you found this video helpful and informative in learning the concepts of Social Security taxes and Medicare taxes.